Hey, this is my daily review. It is Monday, November 12th, 2018. It's about 7:50 in the evening, 7:41 in the evening, and looking back through the day. Took one trade today, and I'll go walking through it, but there looked like there were a couple other opportunities that we didn't get into because they were either after I stopped looking at the charts or before I started looking at the charts. So, good, encouraging action to look and see these things. Validates the setup, but also validates a lot of the rules that we needed to keep in mind, because there were some opportunities to lose on a couple trades today if you would have taken them just blindly without following the rules. So I want to do this view for myself so I can continue to watch these back and kind of understand what I'm doing right and wrong. So when I came in today, about 6:30, this candle here, or this time mark here, 6:38, 6:40. When I had come in, the market had been, it gapped up and it moved higher and it moved back down lower, and then it started making a move back up higher. And so obviously this point wasn't in yet, so this was my target initially. As the market moved higher, if we could get a two-leg move up into the 6128 area, that'd be where we start selling. So if I go over to the 4,000 tick chart, this is that high that I just mentioned at 28. So that's that 28 high up there, and then this is kind of where we are right now, or what I'm looking at right now, about 640, right about there. So it's about halfway between the low that it put in and the high that it put in. So right now, just kind of waiting and watching. It went ahead and put in a pretty distinct high right there. So that'll be a key thing for us here in a little bit. And then it started making a pullback. So there's a couple of different things going on here. There's a 1, 2, and then a 1, 2. So it's a two-legged measured move. And what measured move is, the markets usually like to move in measured type moves. So if we draw an arrow from this point, the high, to the low after the 1, 2, and just copy it, and I won't change the size or anything, and then I put it to the high, and then I can project out where the market's trying to go. And so it went exactly where it went, a little bit above where it was projected to go. So my thought was, if I could get a 1, 2, and then a 1, 2 to push below this level here, we could potentially get a buying opportunity if we had the stochastics line up and everything worked out. But that 1, 2 move was important. It just never got far enough. So I sat on my hands, didn't take the trade, which is, I feel good about that, because it just as easily could have continued lower from here and then got to a place where I wanted it to. Instead, it took off, which is fine. The first trade that I did take, though, was this line. Actually, I was trading this point here. And I'm finding with these intraday, are these kind of interior points, not the major points that you see on the 4,000 tick chart, but the interior kind of ebbs and flows. They're a little bit less reliable, but they are tradable. And so the thing is, when I took this trade, I'll turn my entries on. If you go to data series and you scroll down and you go to plot execution, you say markers only and you say apply, you'll see the arrows where you got in and got out. So I got in. This candle was my entry signal, because just stochastics was over 95. Once that candle closed, I could get in on the next candle. So I went ahead and sold as it moved up. And put my X on here. I got in at 83. And so 83 was my entry. That means 93 was my stop. And 83.73 was going to be where I move that stop down to entry, and then my real target would be 5 cents more than that, like we talked about yesterday. So immediately made the move down. So 83, we're looking for 73 at this point. It hit 73, just barely here, hit 73. So my rules dictate that I move my stop down to my point of entry, so there's no more risk in the trade. Market immediately goes back up, stops me out right at entry, so no harm, no foul. I'm out where I got in, and we go from there. And you'll see that the market continued to just bolt higher. So it validated the rule to move that stop down to lock in the gain. So instead of $100 loss on one contract, it would have been I took a basically took it flat. I'm noticing that when these things turn, they're going to go ahead and just go, right? So we didn't have any points to trade here, but you see what I mean? It's like up and then down. If it's going to go, it goes. If it does this kind of number where it gets kind of hold on to the moving average there, it typically continues to go higher. So just a thing to keep in mind. That was an interior point here, so it was a lower probability, but it was worth a shot as long as you can manage it tighter. So a couple things on the rules there would be either take profits at 10 or definitely move your stop down and keep looking for that 15 target, which can happen. It's worth a shot as long as you get the stochastics, you get the close above, and you sell into a kind of a strength move. So my next target was going to be up here at the top of this 6113, which is a real clear defined pivot point, which I like to see it kind of go up once and then go right back, and not go up and up and up and up and then go back. I don't like that. I'm noticing that is kind of a detrimental thing if you're trying to trade that. So interesting thing here, the market never actually pulled back into the moving average. So it never touched the moving average, which seems like such a minor thing. But I'm also noticing that when that doesn't happen, that means the leg one is not in yet. So I need to, in order for me to actually label this as leg one, meaning this is one pullback two, in order to actually label that, this would have to have touched back to the moving average, and it didn't by a penny. So as minor as that seems, you'll see why it makes sense here in a moment. So continue. It never actually breaches that 13 level. It pulls back, and now it's in the moving average. So now I can count this as a 1. So I got that wrong. I didn't take any trades up here, but I got that counting wrong, and it's easier to see obviously when you're looking back. But so now I'm in my 1. Now I want to see a push above the 13 level, just like that. So that's a perfect example. So stochastics are at 85. When the next candle closes, stochastics are at 96. So that's our entry signal. On the very next candle, we want to sell in. So we want to sell right there, somewhere in a good. I always, when I'm looking at these, I'm looking back and saying, all right, what could I have gotten filled at? So let's say I didn't do that great and got filled at like 16 at the bottom of that candle. Remember, there's 800 orders in that candle, so we certainly have the chance and opportunity to get in at 19 or 18 even, but we'll say we got in at 16. So just 61.26 would be my stop up here. I'd be looking for 06.01, basically 61 would be my target. So immediately starts a pullback. You're already at your 15-point target in the next 3 candles, which only took 28, 29, less than 3 minutes to get there. So it's that knee-jerk reaction. I'm above the point. I'm above that pivot point. I've got my 2 try in, 1. Now this officially becomes my 2. All signs are pointing to now we're ready for the short. Bonus is we got the stochastic signal above 95. So I think in order of importance, I think it's the 1 try, the 2 try, over a level of over a previous pivot point. So that's kind of the most important thing to being able to enter these trades. And then a bonus on top of that is you get your stochastics over 95. You take your short, you go from there. So let's talk a little bit about 2 contract management. So if I got in at 16, now my first target was 15 and I got filled. So then I'd move my stop loss on my second contract back to 16. And I think this one pops up and gets us out by like a tick. So that's something to keep in mind too, is like you could maybe put your stop up here and risk, 16, 17, 18, 19, maybe 4 or 5 cents. You just captured 15, so you're still positive, but putting it above that real clear point in time right there, that way you don't get ticked out, because you would have got ticked out by a penny after this huge move. And this actually ended up being the pivot point on the day, and the stock moved, or the underlying moved to about $59. So it made a $1.17 tick move. So that's on one contract, that's like $1,600 or something, $1,700. So huge point in time here, but it's totally understandable if you move your stop to entry because you want to lock in those gains and be really disciplined. But yeah, just a note there. So beautiful entry here. 1 try, two try, you might have got suckered in to trading this right here. You're like, oh, it's almost there. I might as well just take it. And you probably would have been profitable with this here, but this doesn't happen all the time. So hindsight trading is like what killed me, I think, the most. And it's like, why am I struggling so much at this when it works when I do it, when I look at it back in time, but then when I do it live, it's like, it kills me because it doesn't do what it did the last time. So keep that in mind, why I'm trying to define rules to keep us in the game, pretty much. Okay, so now that this point has been used, and another rule here, or another thing that I'm noticing is now that the point has been used by this move here, I wouldn't then take this short here. And I didn't get the stochastics higher, etc. It worked this time. Again, that hindsight trading can be very dangerous. It worked this time, but it just as easily could have made this type of move straight up, continuing higher. So keep that in mind. Okay, so the most important thing today is about the reason for the two try and why it's so important. So, and here's an example where I mentioned before, I don't like to see it hit and hit and hit and hit. I don't like to see this. I like to see that point in that clear pivot point. Up, straight up to it, straight down. Back here, straight down to it, straight back up. It only touched it actually once. So that's why it becomes kind of a crucial thing. But this kind of grinded on it, and then when it hit it again, you would just blast through it. This is another one of those kind of intraday ones. I actually don't know if it appeared on the 4,000. I'm guessing it probably did because of these new highs that it put in. But yeah, this 60.63 is probably this. Yeah, it's this level that I have right here, 60.63. So actually, if you're looking at your 4,000, you would have been like, yep, I'm putting a line there and I'm trading it, and we'll see what happens. So analyzing this, we got a 1, we got a 2, and we got a double bottom. Double bottom means kind of a range, so I don't like to see the double bottom. So I wouldn't have traded this kind of trap low here. Some people, you can tell, some people tried. They bought in here. They probably didn't get 10. They probably got stopped out, and that's why it continued to flush. So that's what creates a range. So anytime you have a double top or a double bottom, which just means the candles hit the exact same price, you start to form your range. And so it probably looks something like this. But then this line becomes less of a pivot point and more of just a range bottom, which we're not trading this pattern on range bottom, so keep that in mind. I know it's a lot of stuff, but you'll use it. And then another thing is, so here is a 1 and a failed 2 try. So the bulls tried to take it up. They put in a 1. They could not get the 2. So now it starts over. So now as it breaks down, I'm starting to count my 1. And you can see how you never got to pull back into the moving average. So I can't actually put a 1 in here all the way down to there. So then this actually becomes my 1. It just went into an absolute free fall this afternoon. I mean, that's a dollar move right there in a matter of only from 10:30 to 11:30, which is just crazy to see it move that much. But something spooked the market. There's news or probably something that came out. Since we're not watching the news, we just have to look at the price action, and we see a move that starts to go lower, and we never get the pullback, so we never can put our 1 in. So we never can say, here's our we can never really define our 1. Now, if it did something like this, if it did like 1 and pull back here and then it did a 2, I'd feel much better about, selling in that trap or buying that trap right there and trying to get my 10 or 15 out of it. But the fact that it didn't put in that 2 is a big kind of telltale sign that it's just kind of like in this elevator free fall, right? So it keeps moving lower and lower and lower, and we finally get to this big old point way over here from the other day. I think it was actually from Friday, this low point here, and then we also have one that goes right here. Actually, I want to look at the 4,000 on this one because I didn't quite see it. Yeah, so we're right in this area right here. Again, it's the same exact thing, that this has started into an absolute free fall. There's no, people shorting this or people trying to buy this like our strategy is, are just getting slaughtered right now. So you could have potentially taken, you could have potentially just bought in here. I think you even got the stochastic signal. So this is that real heavy area support. Sorry, let me get the chart straightened out here. So let's click back through this. So we have 5.6. There's our 3.98. So technically we've closed below these support levels. So there's what we're considering our trap. We would have gotten in on the next candle. So say we got really good pricing at, 971. So we would be looking for 81 to at least move our stop up, which you can see you never get. And you would have been stopped out right there. So 71, 61. And that's what all this is. This is a continual people getting stopped out. Stop. It's pushing the market lower and lower. So again, just looking at the analyze it here a little bit. Actually that's a lower low, so you start over. So there's a 1, touch the moving average, there's a 2, so that move is complete. Then you're starting move number 2 and it fails, so then we start the bear cycle. 1 and no pullback, right? So 1, no pullback, no hit of the moving average. So that's where that 1-2 punch comes in and why it's so important. And we get all the way down here to this even larger level of support, 59.26, and we can click through that one. There's our stochastic signal, but we didn't close below. There we closed below, and we're at 1.27, so that next candle would be a buy. So if we got really good pricing, again, we don't have a pullback to the moving average, so I wouldn't advise this trade. But say you got in at 20, so we'd be looking to move our stop once it hit 30. It just never even comes close, and you get stopped out. So that would have been a 10-point stop there, a 10-point stop out there. If you took the earlier trade, it would have been a 10-point stop out there. So that would have been 300 minus 300. You may have gotten this one, so you got 150 back. So you'd be minus 150 on the day. If you took this one, you would break even. So real important on those 2 tries. And the more you see them, the more they're going to start to make sense. So again, we have 1 pullback, failed number 2 because it didn't get back to the high, and so then we start counting our bears. This one was a little more convincing considering everybody's going to interpret it a little differently, but you could have said that this was 1 and this was 2, but I don't start the 1 really until we start making the bear move. So the bear move comes when this fails. So this is we're in a bull run sort of here, and this is where your charting comes in handy. But you're in basically, let's see if we can draw this out, put it off the highs. Markets are very cyclical, and so you would draw your channel kind of like that, right? And so all along I'm thinking that this is, and I didn't trade this and I wasn't watching it live, so who knows what I would have thought, but looking in hindsight's always easy, right? So 1 channel rotation, right? So 1, 2, and then I would expect it to pull back to the bottom of the channel and do 1, 2. The fact that it crushed through, now my opinions change. So now I start again, 1, and it never pulls back. Never pulls back. It dives off a cliff, never pulls back, and then you kind of get this choppiness that occurs down at the bottom. So that's the review for the day. I'm flat on the day. I'm happy that I waited and was patient. Happy that I identified, before it reached that level, before the nice setup, I had identified that level. That was my line in the sand. I had drawn the line. I was just going to wait for it to happen. I had a meeting this morning that I couldn't not go to, so I had to let it go. But just knowing that I was patient enough, or in my mind I was like, when I was watching it here, I was like, I'm going to need that pullback, and we got the pullback, and we got the shot up above that support or that resistance pivot. So that's where that level really came in handy. So yeah, so what I'm going to add to the list here is that we don't want to see range. We don't want to see a double bottom in this tight range. And then we always want to see a 2 try, which I do have in the rules. I'll just magnify that a little bit. Always want to see that 2 try. And then, you want to start forming your bias or your opinion of the market when you're looking at it. So drawing your channels, keeping your charts up to speed, etc. So that's pretty much my review for today. I'll call it quits here, and I'll talk to you later.